I think we're going to get a 3 to 5% correction sometime between August, September, somewhere in that range would seem kind of likely, set us up for that year-end rally from October through December. Let's talk about what you need to know before the bell this morning. Market is doing what the market does best right now, is after having a big run, it's just been here consolidating as of late. And one of the things that again, that we've kind of been watching is that we do have this very elevated kind of momentum signal. It's just kind of flipping back and forth. Now, that's not uncommon for that signal just to kind of get hung up and just kind of trade sideways for a while, but as kind of underlying momentum deteriorates in the market. And we are seeing that relative strength is coming down here a bit from overbought condition. That's keeping the market really from making much of an advance. We've just kind of been stuck here for the last week or so, kind of trading back and forth. That's, one of the issues kind of hanging over the markets, particularly as we're going in earnings season. The other is just simply this it's kind of back and forth debate over Fed rate cuts. Again, what the market keeps kind of hoping for is the Fed's going to cut rates, and when we get get this idea the Fed's about to cut rates, the markets rally a bit on that, more accommodation. When data comes in like yesterday and potentially with PPI today, we'll see what the producer price index says. But if there's an uptick in inflation on the producer side, now if tariffs are going to show up anywhere, it's going to show up on the producer price index side, because those are the people that actually pay tariffs. But if that comes in a little bit hotter than expected, that's going to probably weigh on the markets here a little bit more. So that report comes out at 7:30 this morning. So again, we're kind of just waiting for that to come out. But that could weigh on the markets here temporarily. But again, markets just kind of consolidating here, working off some of that overbought condition. We saw this just previously. We kind of got overbought here, worked off a little bit of condition, kind of consolidated a bit, then you had the next leg up in the rally. That's kind of the stair type rally here is kind of what we should expect here over the next month. Now, again, this doesn't mitigate the risk that we're not going to have a 3 to 5% correction probably in August or September. We're getting set up for that. Bullish exuberance by asset managers has had a huge surge. One of the things that was a good propellant for the markets here from these recent lows was the fact that most fund managers were very underweight tech. They had sold off tech going through this Liberation Day event. They'd gotten very underweight, very short technology. Coming out of this, they had to get repositioned, and they lagged that. They lagged getting back into the technology stocks during most of that advance, and here just lately, all of a sudden, they have just come back in force, and we've had a huge surge in both positioning and bullish sentiment on technology. But again, that level of professional investor sentiment is now at levels that normally coincide with at least short-term market peaks. Again, remember, sentiment is a contrarian indicator, so when you have everybody very bullish, everybody that's bought has already bought, right? So that leaves kind of a vacuum pocket underneath stocks for where the next set of buyers are on a correction. So again, we're getting bullish sentiment, positioning, etc., on both retail and professionals back to more extreme greed levels. So, we just kind of keep talking about here lately, just take little profits, rebalance, those type of things, just be cautious. I think we're going to get a 3 to 5% correction sometime between August, September, somewhere in that range would seem kind of likely, set us up for that year-end rally from October through December. That's what you need to know before the bell this morning.